Good afternoon, everyone. My name is Sachen Gudka. I'm the chairman of the Kenya Association of Manufacturers. I'm here with Phyllis Wakiaga, who is the CEO of the Kenya Association of Manufacturers. And I'd like to thank you all for taking the time to log in and for us really it provides a platform for us to give you an update on what's happening, what are some of the proposals in front of government, what are we doing about what have we won so far, what remains to be won, and also what's actually happening in terms of mitigation of the financial damage caused by this crisis. So if we look at essentially what's happened actually, a shock, it's actually a shock to the system. And that shock to the system has come about from a health crisis turning into a severe economic crisis. And there's a very big risk that it may turn into a social crisis. So I believe the actions taken by government so far include or do incorporate a number of measures to at least prevent it spiraling into a social crisis at the moment. What we are seeing, frankly, right now is that we have a black swan event. It's unprecedented, obviously. We're fighting an invisible enemy. And this requires difficult choices, difficult conversations, as well as difficult decisions. The remedial measures, if not taken in time, could really severely impact the economy and us as manufacturers. And at the moment, we face two issues, so to speak. The first one is the jobs issue, and how do we keep people in employment? But the second big issue on this is financial, and the financial impact it will have to most businesses, if not all businesses, operating in Kenya in this environment. So when it comes to jobs, I think the first one is how do we mitigate or avoid job losses? Because if we don't do this and act responsibly as responsible employers, the social fabric underpinning this economy will be severely impacted. And I think we're all very conscious as private sector as well as government that the social fabric must be protected, and we must be seen to carry our people through and shepherd our people during this time. The actions taken so far have protected the daily wage worker and the informal sector at the moment. We're not in a complete lockdown situation yet. I think the government's behaved quite responsibly and acted in a measured way to protect as much of the economy as is possible. The issue is that I think some of the measures taken, obviously life is difficult for everyone at the moment. The measures taken will create, I would say, it's created a balance and allowed the daily wage worker to continue going out and earning their daily bread, and the informal sector to also go out and continue earning their daily bread. Obviously, bearing in mind the health side of things. One caveat we have on this is ultimately the social consideration, the health considerations will override the economic considerations on this. So our aim as manufacturers should be to ensure that we avoid job losses whilst at the same time remaining financially sustainable. How are we going to carry our company through financially, and how are we going to carry our people through and maintain them on jobs? So what kind of duration of the crisis are we talking about? I think, to be honest, as we stand right now, and there are three options. We could either have a V shape, which means we've gone from there to there through the shock? Are we able to climb out of it very, very quickly? That's a struggle, to be honest. And a V shape looks unlikely at the moment. We can have a U shape, and on the U shape, the issue is how long is the bottom of the U going to remain for? And personally, I would say our best guess scenario, or our best case scenario on this is it will take us about 6 months to get out of this. The worst case at present looks to be a 9-month scenario. There are obviously this is different sectors will have different viewpoints, but I'll just give an example. The tourism sector and hospitality sector will take 9 months at least for them to get out of the flight ban, plus get out of having so many hotels and restaurants and bars closed. So this will be a struggle for them. Can we get out of this in 6 months? Certain sectors can, certain sectors won't. The flower sector is impacted, but please, let's all remember that manufacturers play an important role in the supply chain, which impacts all these other peripheral sectors, whether it's flowers, veg, tourism and hospitality, and so on. So our members are heavily involved in the supply chains, and we need to make sure that that continues. So realistically, probably looking at a 6-month period before which things can get back to what we call normal come through. GDP impact, I would say we're looking at, initially Kenya's GDP was going to be at about 6.1% growth in 2020. That was brought down to about 5.3% following the locust invasion. The 5.3 obviously looks absolutely bullish right now. In Q1, we are likely to see some decrease or some contraction in GDP, especially after basically I think Kenya went into a kind of a 50% state for pretty much the whole month of March, and we're entering April the same way. There has been a collapse in demand for most items. For certain items, obviously you've seen an increase, like healthcare products, sanitizers, and some food items. So a typical period, what happens is there's some panic buying, then there's a lull, then there's a drop, and then there's a sustained reduction. And I think what we are likely to see is probably this sustained reduction for about the next 3 to 6 months, in which we have to ride ourselves through. The 2% growth for GDP in 2020, for the whole of 2020, looks optimistic to me. Treasury is saying their worst case scenario is around 3.5% GDP growth in 2020. I personally see less than that, and if not a contraction in 2020, because of what we call the complete reduction in demand that has come through. The fuel sales in the month of March were 50% lower than normal compared to last year. That is partly impacted by jet fuel sales because the airlines weren't flying. So jet fuel demand has gone down, but at the same time, obviously you've seen a lot of reduction in cars on the road in March, and that's continued through in April. So I would say the GDP forecast looks to be low, and we are going to have a significant impact on our GDP, and I think we'll feel it in all our companies as well. On the financial side, I think realistically there are 3 options for businesses really to consider, and the first one revolves around asking bankers for at least a 6-month moratorium on principal. I think as manufacturers, we have to be proactive, go to our bankers and say, guys, we need to discuss about, in terms of any lending, can we have at least a 6-month moratorium on principal? some three banks have actually or have informed all their SME customers that they will look at an initial 3-month moratorium on principal. It may not be enough, but at least take what you get and then negotiate afterwards after another 3 months. A second point to ask the bankers is to pass on the CBR reduction of 1.25%, which essentially CBK, the Central Bank of Kenya, put through. So the bankers have not passed on the benefit of that CBR reduction to their customers yet. We're in regular contact with the governor of the central bank, and he said it will take this month and probably a bit of next month by the time the banks are able to pass that on to manufacturers. So we're eagerly noting the same, but when you're writing to your bank and asking for the moratorium reduction, please also ask for the CBR reduction as well. The third point to ask your bankers to ease your cash flows is to request that interest be paid on a quarterly basis and not to be charged monthly. And how this helps you as manufacturers is really that it obviously saves you the cash flow in these tight months of April, May, for example, and then your interest payment is due at the end of June, but it also stops the accumulation of interest on interest. So this will be of a small benefit to you, but please mention that in your letter to the bankers as well. When it comes to jobs, I think most companies are adopting a variation of the following, which is looking at, I think, number one, assessing their workforces and saying, who are my performers, who are the non-performers? So I think a practical approach is being used. Number two is people are asking their employees to go on paid leave. So basically call this an extended Christmas period, and all members of staff to take their paid leave now and not take leave later in the year. Some people are asking their staff to take pay cuts, which will be universal. So you can look at a graduated pay cut scheme to keep everyone in employment and everyone shares the pain. So the employer shares the pain of keeping them on the payroll. The employee shares the pain of taking a pay cut. If things look better next year, then you could call that a deferral. And actually, if you have a better year next year, try and make it up to your employees to get to make sure that they benefit from the pay cut and the sacrifice they've made this year. See if you can make that up to them next year. The third option is to look at unpaid leave. And unfortunately, unpaid leave solves no one's problems. Although you don't terminate the employee as an employer, the employee doesn't have anything or any salary or any income on which to meet their expenses, whether it's food, shelter, or clothing, and so on. So I think the unpaid leave option, which has actually been exercised by the flower farms and so on, following the drastic collapse in demand, is kind of kicking the can down the road. And essentially what you do need, particularly for the job side, is, if possible, can we look at what we call mitigating the pain with regard to this, for especially what we call furloughed employees or employees who have gone on unpaid leave, and also employees who have been terminated. So I think in reality, people are exploring a combination of all these schemes. I have to say there haven't been what we call drastic terminations yet, but I think employers and manufacturers' backs are against the wall. And we have to be realistic and calibrate all the options available to us. So one of the main Other areas I wanted to talk about, I can see Job has joined, but really is needed to talk to you about preparing for the rebound. So up till the time, and we're looking at maybe 3 to 6 months for the rebound, is can we sustain ourselves, and please don't get into a cash flow negative situation such that you're leaking cash every month. I think you need to take enough protective measures, be it talking to your landlords if you're in rented premises, to kind of defer or share the burden as well of the rent with you. Maintain your employee measures that we talked about earlier, and really try and be as highly efficient as possible to ride yourselves out of this. But please do not get into the spiral of dipping into your cash reserves over this period. In terms of the rebound, world supply chains are getting reorganized. I think if you look at China, there was the US-China trade war last year, and people were starting to think about shifting production out of China. You're now also starting to see, especially with COVID-19 now coming through, a lot of economies, particularly developing economies, will start essentially looking at onshoring local production and making sure that things are available locally. And I think as manufacturers, take advantage of the fact that supply chains are getting reorganized. Apparel and textile is likely also to move quite a bit from Asia into Africa. Let's take advantage of those opportunities and make sure we also take advantage of some of the other free trade agreements and so on that are being negotiated with the US at the moment. Coming back to jobs very quickly, discussions with the unions. I think the unions are quite flexible at the moment, and the jobs on the job side, don't hesitate to ask the unions for at least a pay freeze for all employees if you're keeping them on board, because I think that's the least that can be done. And some companies we know of are already negotiating 2-year wage freezes for their employees with their unions. So that's a discussion you can have with your unions. So what have we actually seen so far in terms of the response from government to some of the proposals we've made? Perhaps I can ask Phyllis to chat through that, and then I'll chip in where I can. Thanks, Phyllis.
Thank you. Thank you very much, Chair. I think Chair has covered a considerable amount of ground. I want to take this opportunity to welcome you all. Thank you for joining us for this webinar. I'm seeing that all of us are adapting to technology quite well. You've also been participating in some of the Zoom calls we've had and been very active. So thank you so much. I just wanted to mention that as we go along, if you have any questions, kindly post them in the Q&A. We have a team that is picking up the questions, and at the end of this, we'll be able to take up the questions that you will put up in the Q&A session. So please feel free to ask any questions. So the engagements we've been having with government have been ongoing from the beginning of this process, just to see how we can mitigate the impact on business. And I think all of us saw the statement by the president where he made some commitments around first of all, the VAT refunds, the fact that about 10 billion was going to be put aside to pay for the VAT refunds. Then there was the issue of the supplier payments that will also be made. There was the reduction of the corporate tax from 25% to 30%, the VAT from 16 to 14%, the issue of turnover tax that also moved from 3 to 1% for the SMEs, and a host of other measures that were mentioned in his speech. For those that can be implemented immediately, like the VAT, I think we saw a gazette was issued by the Cabinet Secretary of National Treasury. For the others, these items have been picked up for parliamentary amendment because a number of them have to go through the parliamentary process. Because of this was subjected to the tax amendment bill, which unfortunately also captured other issues that went beyond what the president had prioritized. As an association, we have collected feedback from our members. We've already submitted our memorandum to the National Assembly with the concerns we have regarding some of those proposals in the tax amendment bill. And what we are advocating for is that we see the president's commitments that are meant to address COVID-19 put in place as we try and support business to navigate this season. And then those other issues can be debated later. So this is something that we are advocating for in terms of the measures. So I had some areas I was going to cover, so I'll quickly go through those areas and bring you up to speed on some of the things. The first one is the issue of the operational issues that are related to the curfew. As we all know, on 27th March, a curfew was declared between 7 p.m. and 5 a.m. to mitigate against the spread of COVID in the country. And also further to that, there's an additional measure where there's limited movement out of Nairobi metropolitan area, Kilifi, Kwale, and Mombasa counties. What we've been doing is engaging so that we try even within this season to ensure that as far as possible, our members are able to continue to operate. We have worked with you and put in place the workplace protocols, and thank you for implementing those within your industries. What we've also done to enable you to move, we have put in place a sticker system that has been approved by the command center and will be recognized. And we have asked our members to let us know how many they need for themselves and their supply chain. Since yesterday, members have been collecting the same, and we encourage those who haven't to kindly apply through the members help desk, and we will issue you with the same. Just for clarity, manufacturers can continue to run their lines, and we have seen a number of people move to 2 shifts. What is prohibited for non-essential industries is the movements between 7 p.m. and 5 a.m. And then the producers and suppliers of the essentials can transport 24 hours around the clock, and the stickers we are giving you are supposed to enable you to do that. So as I've mentioned, if you're interested in a sticker, get in touch with us, give us your expression of interest, indicate the number of stickers you'll require, and also organize to collect the stickers from the head office in Westlands. Then in addition to the affixation of the stickers, you'll need to put the car registration number, the name of the driver, the national ID number, and the company name. And that's something that we are willing to support you, go through the members help desk. So please get in touch with us. I think the chair covered the issue of job losses, and that is something that we are trying to see how, as much as possible, we try and retain jobs and livelihoods within this difficult session. We are also trying through the Manufacturing Academy to support and come up with different programs, and we'll be rolling out programs to support you also to see how you transform your operations and cope with what is currently affecting business. Then the next update I wanted to give was on the COVID-19 Emergency Response Fund. This fund was put together. It is comprised of private sector members, and our board member, Jane Karuk, who is the chair of the fund. I'm also on the fund, and we have the banking sector represented, the hoteliers and other sectors represented. Then from national government, we have CS Fred Matiang'i, and from the county governments, we have Governor Oparanya. So what the fund is supposed to do is to complement the efforts by government in responding to COVID. The reality is we all know this is unprecedented and no one would have planned or expected this. So this fund is trying to deal mainly with the health response towards COVID and the issues around welfare and livelihoods. We have sent a request to members to see how they can support. You can support by donating directly to the bank account for the fund. There are some members who want to consolidate their donations through KAM, and we welcome that. We'll be facilitating that also. And there are also people who are giving in kind. So Sally Kahyu, who is our head of corporate communications and PR, is coordinating all this. So please get in touch with her. But let's see how we can come together to support our country through this difficult time. Then the other thing we've tried to do also is to see how we can envision going forward what would be required in the event of a lockdown. Say, if we got there as a worst case scenario, because even the work we were doing around essential manufacturing and everything was just to ensure that if any more stringent measures come in place, we already have something that our members can work with. So we are constantly sitting as the board, as sector chairs, doing scenario planning, and even with our members who are available to do this. And what we are trying to do is to be 2 steps ahead to try and forestall any disruption and unforeseen happenings. And we encourage you to keep communicating, letting us know what support you require from us. The rebound is also critical. We are not just focusing on the crisis today, but we are trying to see how quickly we can rebound when things, when we get past the pandemic stage, how we can have recovery as quickly as possible and grow the manufacturing sector. One of the things we are doing is to document recovery strategies that have worked in the past and see how we can drive this or implement them in the current situation. We're also seeing how we can, going forward, start rationalizing government expenditure, which we all know is quite high and can be an impediment to growing our economy the way we want to. We're also proposing the issue of negotiating loans with development partners and restructuring the debt we have as a country. The issue of SMEs is critical. Maybe Chair will add when he speaks again, but we are working to see how SMEs can be supported through this period. We have put together some proposals through our SME Hub, and we thank the members who participated that we have put forward to government to see what can be done to cushion SMEs and see how this can be administered either through KIE or the Industrial Development Bank. This would supplement what the banks are doing to ensure that we cushion SMEs. We are also in the rebound or going forward, trying to see how we can strengthen domestic industry. And we are very happy to see how resilient industry has been and very creative, even during this season, to try and produce some of the products are required, like the PPEs. And there'll be a lot of opportunities even within this crisis, and we encourage ourselves to rise up to the occasion. I know that you'll be seeing some requests for procurement through MOH, and this would be around PPEs. We've been asking who has local capacity. We encourage you to get your KED certification. If you need our support, let us know, because these are opportunities that we can take advantage of in the immediate term as we move forward. We are also seeing how we can, the deep dive report that we carried out a year ago really pushed the opportunities within all the sectors because the appetite for local manufacturing, as the chair said, has really increased. I think everyone now knows that it's important to build a strong local industry. So we want to take forward some of those gaps and opportunities we realized in the sector deep dive report going forward and see how we can grow more local manufacturing. So I'm going to try and give you, because we've had a lot of questions through the members' help desk on the issue of the curfew. We are putting together FAQs that you can, will be circulated to all of you so you can have more clarity, but I'll just quickly go through just some more information that would be useful for you on what is happening in terms of the cessation of movement. So the travel measures are stipulated, as I said, was that no civilians are allowed to travel to or from the zones that were mentioned, the Nairobi Metropolitan, the Mombasa, Kilifi, and Kwale. The trucks ferrying goods, however, will continue to move, and there are certain documentations that are required, which we shared with all of you, but the truck drivers need to have their work IDs and demonstrate that they have the documentation. The stickers we are issuing, when you affix them on your cars, that will also be very useful. The boundaries have been defined for Nairobi metropolis area, and I think we saw quite clearly where those boundaries were. Then the Kiambu part, the Machakos and Kajiado, those boundaries have been clearly defined. And this will go on for the next 21 days for both the Nairobi area and also the coastal areas. The staff movement out of Nairobi has actually been banned. However, we had a request from our members who have technical staff, sometimes who are maintaining machinery out of town. And for this, what we are working on is a notification system where if there is need for anyone to move out of town, a notification system will be set up with the Business Response Center under the Ministry of Industrialization. KAM can help to follow up, but we'll give you the process so that you can notify the ministry and get the approvals in good time. Then for your staff, as they move around, they'll need also their staff IDs. Then for the coastal counties, also we've had questions from our members on Mombasa, Kilifi, and Kwale. Those are considered separate units, not like Nairobi Metropolis, which is one unit. For the purpose of movement of staff, we had a conversation with Ministry of Industry. We've talked to Ministry of Interior, and they want to ensure they facilitate the movement of staff across those regions. And what we've agreed is to draw out protocols which have just been finalized, and we've shared them with the Ministry of Interior, so that as the operational order is being implemented, staff who are moving with IDs and who have been organized by their employers are allowed to move across those counties. So we'll be giving you more information about that tomorrow. In regard to the essential goods list, we have a final essential goods list. We had a draft last week, and we collected feedback from all our members over the weekend on some critical items that had been left out. Job and I were able to discuss this with the Ministry of Industry, the command center, and yesterday they gave us a final go-ahead on the essential list that captured most of the additions we had proposed. So we'll be circulating that to everyone, and you then allowed to use that as the essential list as you move around. So we encourage you to continue to put in place the workplace protocols that we shared. If you need more information, we have a lot of information coming from different members who are already implementing some of these things in their workplace, and we're willing to share with you so that you can put them in place also within your workplace. So thank you very much, and I'll hand over to the chair to make any additions that we have.
Thanks. I think just to add on, so what have we actually seen from government so far? Number one, all paid up members of KAM will get green channel status with KRA. And that has actually been circulated by the Commissioner of Customs to everyone at the port and so on. So I think that's a significant win. Essentially, green channel treatment will be given for KAM members. The second one, just a quick one on the VAT refunds, 10 billion. Treasury has to find the money from somewhere. It has to go through Parliament. Parliament were due to sit on Wednesday this week. They are now going to sit on Tuesday next week. And once Parliament gives the go-ahead, then Treasury can allocate 10 billion in supplementary funding to KRA. We've requested that the money be dispersed from KRA in a frictionless manner to all claimants, and at least the 10 billion be given in a pro rata manner to everyone, all claimants, and then post-compliance audits be done after. The balance of roughly 17 billion can then be allocated later. Probably the ones which have the highest risk of job losses may get prioritized over the next 3 months on the balance of the 17 billion. The third one is we've seen obviously a reduction in VAT. Hopefully that should prop up demand and also reduce the burden to consumers. And I hope as factories, there was a complaint from some retailers that some of our members had not changed the VAT formula on the 1st of April to 14%. So we have reached out to those members. Fourthly, there's a situation room which has been set up at the Ministry of Industry, which is funded by DFID, the Department of International Development from the UK, and McKinsey are part of it. KAM has seconded 2 staff, Jackson Wambua and Georgina Washuka, to this situation room, and we are quite close to some of the actual things that are happening in real time. There's also a business emergency response committee for which if any of you are hitting any obstacles and so on, action is taken pretty fast, and we've seen some pretty strong turnaround on pretty much all of the issues. In terms of the border, the movement for exports and the border protocols were developed by us, and we helped Ministry of EAC on this. And at least right now within the EAC, although there's no movement of people, there is movement of goods, and I think that's although there were a couple of teething problems over the first few days, things are back to normal. In terms of this situation room's main role, there are basically what we call 7 streams of work. The first one is economic stability and continuity, and within that there are 2 main areas. On the first one, it's to make sure government has sustainable funding. And what that will entail will be cuts to non-essential government spending. It will entail unlocked sources of capital, for example, unclaimed assets, financial assets authority, or also looking at pensions and so on. And the third one is to seek external support from development partners, both government as well as development institutions. The second one, under the economic stability and continuity, is to ensure the survival of strategic industries and businesses that are critical to the country's economic future, including the manufacturing sector. The targeted fiscal support for strategic industries will be considered, and businesses, and we're talking about the likes of Kenya Airways, for example. There will also be support to large businesses in crisis through operational transformation. The second major pillar on this is jobs and household income, and under that pillar, it's about reduction of job losses and salary reductions, and interventions to help vulnerable businesses manage cash flow. There's also measures specifically to support MSMEs, and thirdly is to create employment protection schemes under this. Within the jobs and household income sector, you also have a pillar supporting the most vulnerable populations. So this will include a direct cash transfer program to vulnerable populations, as well as non-financial support, for example, provision of food and essential services. The third major pillar is supply of essential goods and services. And within there are 2 buckets. The first one is to ensure that people have access to essential goods and services, and measures to maintain production and supply chain of essential goods and services. We've seen that, including food and sanitizer and so on. The protection of labor as well, and logistics and trade movement. The second bucket under the supply of essential goods and services covers about the price affordability and keeping prices as fair as possible. And I think, members, we have a duty to make sure that we maintain fair pricing. There will be considerable scrutiny by the Competition Authority of Kenya and the Ministry of Industry in price monitoring and to look at areas where prices have spiked up considerably. We've seen an increase in the price of things like thermometers, etc. And I think the Competition Authority of Kenya is really going to come down hard on people who try to make super profits out of this. It's our duty to act responsibly and to make sure that pricing is maintained. I'm conscious that the exchange rate that we have at the moment may lead to price increases for certain categories, as well as some food shortages, particularly on maize, may also lead to an increase. But I would request you to be balanced in your your pricing, and not to take advantage of the situation we're in, whether wananchi under considerable pressure. The last item is under number 7 on the situation room is post-COVID bounce back measures. So what are the strategic opportunities and long-term direction for businesses, including manufacturing, given the context of COVID-19? And secondly, how do we have a long-term economic recovery measures and interventions to help businesses kickstart operations post-COVID? So really, this is the mandate of the Situation Room. As KAM, we've supplied the Situation Room and CS Betty at Industry and the team with detailed proposals on really 3 areas so far. Number 1 is to create a viable and sustainable long-term future for the apparel and textile industry. So that paper's gone to CS Betty, and we've requested an audience with His Excellency, the President, on this. The second one that's gone in is a proposal on furloughed jobs and terminated jobs. So what mechanism can we put in place for a support mechanism for people who've been laid off through no fault of their own, through collapse in markets like the flowers and even on apparel, as well as tourism and hospitality and so on. We haven't limited it to manufacturing. We are working in the national interest and to provide a national solution for a critical social problem at the moment. The other proposal we've given is on support for MSMEs. And we've looked at quite a few models across the world. We found the one done in Switzerland probably one of the most effective, which is actually meant a 2-pronged approach, whereby on the first one, government provides interest-free loans with the absolute minimum administration to businesses, to MSMEs, which is capped at a certain level, either 10% of turnover or an upper ceiling of around 1 million shillings, and for government to provide an interest-free loan for 6 to 12 months on this. The second proposal is for actually banks, for the government to work with banks such that the government guarantees at least 50% of the loans that banks give out, which should reduce the cost of credit risk and allow for better pricing, but also allows the release of liquidity into the market for stressed businesses, such that the MSMEs can also have access to bridging finance during this period. So these are all proposals we put forward. Phyllis and I, Mushai as well, the Vice Chair, will be working with McKinsey and Ministry of Industry tomorrow. I know it's Good Friday, and Shiru, Director on SMEs for the SME Hub, to bounce through all these ideas and challenge each other and actually come up with a proper way forward, such that it can go to the final economic team led by CS Yatani, CS Betty, CS Balala, CS Aidan Mohammed, and the Governor of the Central Bank of Kenya. So I think that gives you an idea. One other thing we've looked at is the tax amendment bill. Frankly, this tax amendment bill, which has come about, it's like moving 2 steps forward and 10 steps backward. And this is absolutely an insensitive time for Treasury to consider even looking at putting through some of the proposals they put on the table on the tax amendment bill. I think a lot of you will have read Mushai's op-ed on this. We feel strongly about it, and we'll protest loud and clear to Parliament and ask for them to reject a number of the proposals that have been put through. Treasury's view is, look, we faced a collapse in revenues at KRA, therefore we need to find the funds from somewhere. And I think our response to them is, guys, we're in a crisis which no one foresaw. And I think you need to be careful about balancing the needs of the consumer And we've also got an obligation. Every country's prepared an economic stimulus program. We also have an obligation to do the same. Countries like the US have allocated 15% of their GDP towards the economic stimulus. In Kenya, we've done less than 1% so far. So I think there's a lot of headroom, there's a lot of way to go on this. We are working closely with government, and I think at some times, I think Phyllis, Mushai, myself, and the entire secretariat feel like we're acting as a call center. We're also acting as a post box and shoving messages from one group to another. We're also preparing a lot of proposals to government. So there's a think tank behind this. And lastly, we're also trying to run our own businesses. So there's a lot going on. I believe I need to actually thank Phyllis and the team and the board of directors of KAM most sincerely for all the incredible time they've put in, the incredible ideas that have come through. And I would say there's been a general appreciation of the tough environment we're in, and we all need to come out of this together and come out of it better and stronger. And let's plan for the rebound as well. I know it's going to be a tough next 3 to 6 months. We need to ride the storm, but we also need to prepare for the rebound. So I think, Phyllis, you've got some questions from the group, and maybe we can tackle those.
Yes. Thanks for participating and putting in your questions. I know Tobias and the team are looking at your questions. They're responding to some of them directly. And because we have about 13 minutes left, we want to stick to the time we committed to. We might not go into all of them, but we will respond to you directly, either on the screen, or we'll pick them and give responses as FAQs. So the first one is, can the stickers that we're issuing, yes, on the issue of vehicle permits for transporting around the clock, how do you deal with multiple drivers? Will we need to put multiple stickers on each vehicle? What I think you could do is, right, because there's a place where we were asked to put in the name of the driver, you might need to put in maybe 2 names if you have 2 different drivers who drive that specific vehicle. If they go beyond that, you might need an additional sticker. So you could do that for now. I don't know. Yes, he's picking them for me from there. Then another one is, can the stickers be used on private cars for individuals who have to work late into the evening, like dispatch teams? If you issue them to the private cars, please just record on your end, and you might need to be able to give us that information, who you have issued to and for what reason, because the command teams of the people manning would need us to have that information. Basically, why they've given us the stickers is for quality control. They know we are only issuing to the people who are required to have them. So please be accountable on your part and keep a record of if it's a dispatch staff of any other vehicle that you issue to. There's one of our members who's asking to give additional services to our members to navigate this season. This is Charles. We'll be getting in touch with you through manufacturing. Yes. Yeah, from Corp Bank. So he's asking about the opportunity to help members in digital banking, e-commerce, and other areas. Charles will get in touch with you as KAM, and then we see how we can.
Also, just to mention that Standard Chartered Bank has also, I think, provided set aside $1 billion worldwide to help manufacturers through this process. So I think that communication was also sent out to members as well. So I think a lot of banks are opening up and willing to partner, and please reach out to your bankers as well.
We have a question from Pauline Okubasu, who's one of our SME members, asking how we'll support the SMEs. And I just want to say that we've been collecting proposals on how SMEs can be supported through this period. We've done the same through our SME Hub leadership. These have been presented to government. And as Sachen said, tomorrow, which is Easter Friday, we will be working from 9 o'clock trying to put this together with McKinsey to see how we can support our SMEs. There's a question by Depen about the fact that they manufacture oxygen, and they might require some support with Pharmacy and Poisons Board, they can kindly get in touch with us. We will support you. So through Members Help Desk or Job Wanjohi, please get in touch and we will support you to get these approvals. Another question is about Kwale County and the movement of spares across. As I mentioned, we are developing a movement protocol that has just been finalized by the chair and the team, the executive committee in Mombasa. We are taking it through the approval process with the Command Center and Ministry of Interior, and we'll be sharing with you. So I hope that will be able to assist you to make any relevant movements across. Someone asked about the issue of employees and what we are doing in terms of minimum wage. One of the commitments we got is that there'll be a freeze to the minimum wage, the increment that comes on May 1st. There are still further discussions on labor. As Chair mentioned, we've put in some proposals on what can be done around labor. So we'll be seeing what can go through in that regard. There's a question from Kilan on the issue of dairy and how we can support the local industry that produces and make it more competitive for them to produce. We look at any proposals from the sector that we can present to government to support the local industries.
Then there were some questions earlier. So one was, can we propose government to revise the minimum wage order to reduce the burden on the employer, since employee will benefit on PAYE now? That's not on the agenda at the moment. But what we have done is given a separate proposal on the furloughed jobs, which should help. Fred Otieno has asked whether there are any industries that will become localized to drive Kenyan industry. Yes, I think very much so. And I think we'll see more and more onshoring of manufacturing and so on. I've also been impressed by the speed with which some manufacturers have turned their production lines to the manufacturer and adjusted their production lines to the manufacture of PPEs, be it hazmat suits, be it gumboots, be it gowns, hospital gowns, scrubs, and so on. So there's a lot which was not being produced locally, which is being produced locally now. So thank you, manufacturers, for being innovative and for rising to the occasion on this. Ashish Majithia asked whether the suspension of withholding tax or VAT of 2% is possible. It's not. It was reduced from 6% to 2% already. But what we have asked for is the offset, the ability to offset the withholding VAT against credits against other taxes. But given the collapse in KRA's revenues at the moment, I doubt that people will be allowed to offset everything at one go. So we're in discussions with them about it. Suspension of VAA, as it is time and resource consuming, a discussion again to be had with KRA, no concrete direction. Then Mr. Veerakumar Subramaniam asked, what's happening on the announcement made by the President, especially on supplier payments? The pending bills will be honored and the VAT refunds will be honored. And so that, I think that statement that was issued that all payments are on hold is misleading. The pending bills amounting to almost 13 billion shillings will be paid out once Parliament resumes, and so will the VAT refund of 10 billion. That's what Treasury have assured us of. It just helps to tackle the adverse liquidity situation. We mentioned about the tax amendment bill. Someone requested whether the tax amendment bill and our proposals to government and Parliament, can that be shared with members? Can we do that? We'll get Miriam to send out communication to all our members. We'll also publicize it as well. and so on. And I think someone else, an anonymous attendees, asked about the formalization of orders by PO or contracts. Phyllis, do you want to talk about that?
Yeah, for this one, what they're saying is that we need to be cautious, as Chair said, that we can invest to take advantage of the business that can come out of government, but we need to plan to get formalized orders. So I know, for example, there's an RFQ that's going to come out maybe in a week or two for certain PPEs, hygiene products, and things like that. And there'll be certain requirements like the fact that you need to have your KAM certification in place for you to participate in such tenders. So I would advise that we invest in getting those things in place, but that we have formal orders that we then are able to put any resources towards, so that we don't get our fingers burned. Anything you want to add, Chair?
I think just in closing, I just like to request all of you to remain resilient, remain innovative, remain strong, and also try and retain as much of your people as you can, so that it doesn't perpetuate or doesn't exacerbate the social issue. Next week at 2 o'clock on Wednesday, we've got Kaizen Institute doing a free webinar for members about how to cut wastes and not just cost. So I think an invite will be sent out over the weekend to all members, which will be on Zoom and led by Kaizen Institute, who will broadcast from India. Jayant Murthy will lead the discussion. Also next Thursday, we'll change the timing of this. What we've agreed internally is that we'll get 2 directors a week to speak on various issues, including any follow-up discussions and so on, to carry on from this briefing that's been done. And next week, we'll get our Vice Chair Mushai, as well as Jane Karuku, the MD of Kenya Breweries, who is also the chair. She's a board member at KAM, and also she's the chair of the COVID-19 Emergency Response Fund, to talk to you about what's happening in their industries, and also how we see developments, because as you are well aware, this is all dynamic. Things are moving so fast, and people are having to make decisions, quite a lot of decisions on the fly. So we'll get Mushai and Jane to do a webinar for all members, whoever's interested, next Thursday at 2 o'clock. And then the following Thursday, we'll get 2 more directors to do the same, and so on. So I hope this is of value to members. I hope you get a good feel about what's going on and how we're working with hand in hand with government to try and craft solutions that can work in a Kenyan framework. We've seen a lot of things happening in a worldwide context. There are things that are unique to Kenya. We're also in a fiscally constrained situation. We need to make sure that we get the biggest bang for the buck that we can at the moment. So I'd like to wish all of you a very pleasant Easter break. A lot of people will be working through, but I'd like to wish all of you a great Easter break, and also for you and your families to keep safe in this environment. One last word from Phyllis on member subscriptions.
Thank you very much for continuing to be members of the association. We encourage you to pay your subscription. For those who have, thank you for paying your subscription. We also want to tell you that we're here to support you. We have a members help desk that's manned fully, and please continue to write in on any of your issues at membershiphelpdesk@kam.co.ke. We've seen a lot of queries still on the stickers. We'll address them directly through the help desk. We'll also send out FAQs for you. So thank you so much. We look forward to meeting you next week again. And if you have any topics you'd like us to cover, do let us know. Thank you so much, and happy Easter. Have a good evening. Bye, everyone.
Thank you. Bye.